And welcome to Dollars and Making Sense, a weekly show about finance, money and investing. I'm your host, Ray Treverson from OTG Capital. We broadcast locally on Radio Northern Beaches and around Australia on the Community Radio Network. I'm really pleased to welcome to the microphone this time, for the first time, Anna Vennonen from Coredata. You are a research consultant. That's right. I'm just looking at my piece of paper here. You're a research consultant. So, Anna, how long have you been with Coredata now?
I've been with Coredata about 9 months. So I joined in September last year.
Wonderful.
And well, time has gone very fast. Yeah.
It always does when you get that kind of job. When I met Andrew Inwood, your CEO at the conference last year, fascinating guy with an incredible company. And so I'm continually am fascinated by what you guys do. So look, ladies and gents, the reason I asked Anna to come on, we were at a luncheon a couple of weeks back, and I met Anna at this corporate function, and we were talking about crypto. Now, crypto always gets my antenna up, and I'm interested, not because I'm necessarily an investor. Anna, I'll tell you up front now, I'm a cynic, horrible cynic when it comes to crypto. But given that we talked about the research that you'd done, and one of the reasons why Coredata, I guess, brought you on to staff. So I guess let's get into that. We've talked about you've been with Coredata now for 9 months. Well done. So I guess my first question is, what piqued your interest in crypto and what compelled you to write a thesis for your master's degree on this?
Well, I guess I first heard about cryptocurrency in around 2017, and just the idea of this kind of digital money that was being transacted on the internet anonymously without any kind of government backing straight away just sounded like an interesting concept to me. I'd never heard of anything like that before, and the fact that there was this kind of alternative currency happening out at a global level now was just something that piqued my curiosity. And in terms of why I chose it for my thesis, I actually have a background in social sciences, so sociocultural anthropology, and I noticed that not many people were sort of looking into these areas, particularly technology and economics, at least among my classmates. So I thought, all right, this is a good opportunity to do something a little bit different. And I guess when I started looking into the existing literature, I saw that there wasn't very much there, but what was there was really, really interesting. And so I enrolled in a course around economic anthropology, and that really got me thinking about the concept of money across cultures, as well as value and how we come to understand things as valuable.
Yeah, that's a good thing. It's the association of value with something that you can't touch necessarily in crypto that I think that piques my interest as well. So please carry on.
Yeah, that's right. It's sort of, people describe it as sort of coming out of nothing. Yeah, so I think crypto gave me an opportunity to explore those things in a way that was very present and sort of connected to this digital reality that we're living in now. And
so you mentioned your undergraduate degree was in the social and human sciences, and so you did your master's degree thesis on crypto. So how long did it take you to do your research and write, what was it, probably 20,000 words, I guess, for your thesis?
Yeah, it took a very long time. I think it was about 90 pages of text. The actual research component was about 7 months long. So in anthropology, we use a method called ethnography, and that means spending extended periods of time with the community that we're studying. So I did 33 interviews and spent many weeks basically hanging out with crypto enthusiasts.
That would have been fascinating, because I guess one of the things, and again, ladies and gents, to give you some background to the reason why I asked Anna on the show, my own daughter is a sociologist, and she did a master's degree roughly along similar lines, I guess, from a sociological perspective, because she started researching the gaming industry and the I guess the quirks about what was going on in the gaming industry, and I found some fascinating overlap. So I guess one of those things that I think really grabbed my attention is the gender split We're talking pretty close enough. I think the gender split, I'm looking at my numbers here, 73, 26% male, female. So roughly 3/4, 1/4. Did that surprise you?
I'm not sure. I think I was almost surprised, that it was that high among women nowadays, because when I first heard about cryptocurrency, it was extremely male dominated. And when you go onto these online communities, you just kind of feel that in the language that people are using, the usernames and things like that. You get a sense that this is a kind of male dominated area. And so actually, I was surprised that now 1/4 of crypto holders are women. And I think part of that surprise actually comes from the fact that women may be engaging with cryptocurrency slightly differently to men on the whole. This is just a kind of theory. I'm not sure. I don't have proof for this, but they seem to be, from my experience at least, sort of holding cryptocurrency or engaging in a way on a more individual level and not really sort of talking about it on Twitter or X.
So they're not socializing the fact that they're doing it.
Potentially not as much as young men are.
So I'm curious, when you were participating in these forums, because again, I will make reference to, I'll just quickly show that, oops, right way around. This is a piece of research that probably won't look properly. It's men who hate women. So this is the incels and the male-dominated areas where the alt-right is hanging out and influencing men. I was curious, though, when you're hanging around with a lot of lads and guys that were under 30 in this sphere, was it toxic or was it very welcoming?
I think there's a bit of a difference between online interaction and offline. So online, the environments can be quite harsh. People are generally not very forgiving when people make mistakes, and there's a sort of a carelessness around collective culture there. But in person, that was another surprise in doing the research. When I came to the Bitcoin Helsinki Club, people were very welcoming, and it wasn't any of that sort of toxic carelessness that you might find online. And I think part of that is that people just act differently when they're in person with each other. There's a
anonymity provides a certain shield that exposes a kind of behavioral context that you wouldn't normally find. I think when people are given, or they give themselves permission to be the kind of person that they obviously wouldn't do so in front of their mother or father. I use that one, would you do this in front of your mum? And so I always use that as my base level of, what's right and what's wrong, I guess.
Yeah.
So that's okay. So again, what was interesting then, similarly, your research shows then that there's a big barrier between age groups as well. What were your thoughts and what were your findings in that space?
So it does skew younger. The majority or the most common cohort that we noticed was these men under 30 years old. Mm-hmm. And when we think about who has grown up with technology, that does really make sense, because that generation is very comfortable with technology. And so I guess it wasn't so much of a surprise to me, but there still are quite a lot of investors or cryptocurrency holders who are over 40 years old. I think it was 40% of them were. So that's still significant.
Okay, I'll have to go back and check with my kids. So over 40 years old now, is it okay? I'll have to.
Not old, but just to show the distinction.
Oh no, I went to a TED Talk kind of thing many years ago, and when they were doing the age brackets in the audience that evening, I was actually presenting that night. This was probably about 10, 12 years ago, and they said anything over 35 was considered dinosaur, and I was sitting there at 54 at the time going, oh crikey. It was like, oh all right, that was a little bit of a shock. But again, it is important to understand context, because you're absolutely right. People my age, I'm 64, so from that perspective, I've been around technology pretty well all my life, but that's because I was in IT. So, a lot of my cohorts and if I only go 5-10 years older, it doesn't sound a lot, but, people there are in their 70s. And so this is gobbledygook to a lot of them. And so there will be this restraint and I guess hesitancy around cryptocurrency. Again, in your research, I always like to ask people this question: was there a delineation between coins and the blockchain? Was there an understanding between the technology that underpinned it and just the coinage, for example?
Yeah, definitely. So some people are big proponents of blockchain, and see that as having a future, but don't see any future in the coins or tokens that have been built on blockchain. So there's a bit of a divide there, and especially when it comes to a use case. So when we are talking about cryptocurrencies, so tokens or coins, there are people that sort of only will prioritize those that have a very strong use case that is based on blockchain, whereas others are sort of just buying them because of their market value or their potential to rise.
Or there's speculative investors that are, I think, being drawn in my view anyway, a lot of clickbait that draws in, the fast money, make money quickly, et cetera, whereas I'm interested in things like the blockchain. I'm interested in what's backing it, what is the fiat currency that is actually underpinning the value. And I think you mentioned a number when we were chatting last week, when we met at that corporate lunch. What are the numbers? What are your estimates that your research tells you how many coins are out there in circulation today?
It's difficult to measure at this point because now there's so many, but the last number that was recorded on CoinMarketCap was 23,000 coins. And then it sort of just blew out to this insane number. So I just like to say that we're over 23,000.
And is Ethereum still the primary white label engine that people are using? Because people know Bitcoin, but the reality is that that's got a lot of the news, but really where a lot of the action is in the coinage is in Ethereum. Is that still the predominant platform?
Yeah, I would say so. It's probably the most well-known after Bitcoin. And then there's a whole bunch of other ones that are sort of these well-known enough. And then there's these really obscure ones, which are often quite dubious.
Dubious. I love that terminology, especially around cryptocurrency. So look, we're about half time now at the moment, Anna. So look, we're going to go for a short break. You're here on Dollars and Making Sense, a weekly show about finance, money and investing. We broadcast locally on Radio Northern Beaches and around Australia on the Community Radio Network. We're going to go for a short break and we'll be back in just a moment. Hi, and thank you for listening to Dollars and Making Sense, a weekly radio program about finance, money and investing on Radio Northern Beaches and nationally on the Community Radio Network around Australia. The views, comments and opinions aired during our program should not be construed or viewed as financial advice. Any commentary is general advice only and does not take into account your objectives, financial situation or needs. You should consider whether the advice is suitable for you and your personal circumstances. If in doubt, you should contact an authorised licensed financial planner. We welcome questions and feedback, and you can get in touch with us via our blog, social media channels or email. Please search for Dollars and Making Sense in your favourite podcast platform or check out our blog at otgcapital.com.au/blog. Hi, and welcome back to Dollars and Making Sense, a weekly show about finance, money and investing. I'm your host, Ray Treverson, and I'm really pleased to have at the microphone this week Anna Vennonen from Coredata. She's a research consultant there, and she specialises in cryptocurrency, and she wrote a thesis on crypto, which I've had a really good read at the executive summary. I didn't read the entire thing. Sorry, Anna, I didn't have time to go through your entire thesis. I've read too many in the last few years, proofreading for people. But look, there were some really interesting highlights. And before we went to the break, we were talking about the male-female split and the young-old split. Now, one of the things that really strikes me, because I'm an ex-financial planner, I wasn't one for long, I'm a fund manager these days. One of the things that really strikes me is that when I'm talking to potential clients or people out there in the investment community, risk profile is a really big thing. And so we're always trying to make sure that people's investments match their risk profile. Now, I think it's a generalism that when you're younger, you can be a little bit more foolhardy and be a bit riskier because you've got time to make up your losses. I think one of the things that, there was two things I want to pick up. So the first one is the cockiness of some of the younger investors. Can you make comment on what you found and what you saw and what your research brought out?
Well, Ray, there definitely is that kind of behavior in the crypto scene. And you don't have to spend long on these crypto forums to see that kind of thing. And it is an area that's very prone to hype. And given that it's happening online and everything's sort of interconnected there, this hype can travel very fast. And therefore, it is quite dangerous to be in if you're not careful about what's influencing you, basically. So academics have demonstrated that there's herding behavior going on in cryptocurrency markets. And this is even reflected in the kind of language that cryptocurrency users have kind of come up with, basically, to describe the scene. So they talk about FOMO, of course, that's outside of crypto. But there's other terms like aping in, or so that sort of,
help me out there. What does that mean?
That means when somebody will buy an investment or a cryptocurrency without doing their due diligence. So there's common phrases around this to describe how people are acting. And what's interesting also there is that there's another side of cryptocurrency users that are very much trying to resist this, and they're putting a lot of emphasis on being disciplined and rational. And there's this sort of motto around doing your own research. You'll probably see it as DYOR for short online. So there's a huge sort of emphasis to push against that. And those are kind of competing against each other.
But I've got a challenge a little bit there, Anna, because you have a master's degree. I did my master's back in the 90s, and the rigor that's required when it comes to do your own research, one could apply that folly and that term across many spectrums, and politics and gender politics especially. I've researched this. It's like, where? Oh, Reddit or 4chan. It's like, I don't really count those as being reliable sources. And having had the rigor of university education, I often find a lot of the discourse still at that very bottom rung of the, of the intellectual scale. Again, that concerns because there are people risking an awful lot of their very own money doing this. Did you find that same kind of foolhardiness?
Yes, absolutely. I'm really glad that you actually brought that up, because people will use that as a sort of cover to say that it's safe if you do your own research, but they don't define what exactly that research should look
exactly.
like.
Where do you go? I'll just go to the same. So,
yeah. So there's a tendency to sort of blame the individual there as well. So the responsibility is all on them. So even if they invested in a scam coin, there's this tendency to sort of victim blame, as opposed to put the focus on the scammers and basically set the standard that would suggest that, no, we shouldn't be doing this to each other.
And yet it happens over and over again. I mean, the last one I did a bit of reading about was Dogecoin. Was it DOGE coin, Dogecoin? I think it's pronounced that way, or Doggy coin. I don't know what the right way to connect.
Yeah,
Dogecoin. And yet I watched, it was like lemmings rushing over a cliff and people following each other into oblivion. And then they wake up next morning and go, why did I lose my money? I'm just sitting there.
Yeah.
I have this wry smile on my face going, oh my God. And the number of times, I don't know, have you ever heard of the tulip markets, from the Dutch tulips markets? And I constantly, I have that particular link from Wikipedia in my notebook ready to send off to people and go, you don't believe it hasn't happened in the past, and it happened 4 centuries ago. And I keep reminding people, guys, we are at that kind of, and the reason I wanted you on the show is to talk about that sociological element, because there really is that very strong piece in there, isn't there?
Yeah, absolutely. So it is very much prone to hype. So it is a sort of dangerous area to be in, I suppose. Sorry, just
okay. No, that's fine. No, but you see, one of the things I want to ask you is that if, for example, somebody came to you as a researcher, and given the fact that you've dived into the pool and I guess got dirty with the in the mud, I guess, what would be your advice to people that if they're starting to say, well, look, Anna, I'm thinking of actually starting to invest in crypto, but I want to go somewhere safe that I can actually learn without fear of being swept up in the tsunami of hype and aping. I think it was you said before, aping. So I guess that means, I'm going to do it. It's like from Life of Brian, we're all individuals. And then, I'm not. It's like this herd mentality. So how do we stop people from doing that?
It's a good question, actually. I think that's one of the areas where it's really lacking. So the hype has very much kind of consumed a lot of people, but they don't have the education there. And there are resources online, but they're sort of just lost within a sea of all this other stuff that's sort of biased toward getting people to invest in a certain cryptocurrency. So it is a bit of a minefield out there. And at this point, there isn't a professional route really to get advice. It's not something advisors are able to generally provide advice on due to the difficulty in getting professional indemnity insurance. So many sort of are not able to touch it and even kind of not able to speak to it at all.
Yeah, I want to cover that before we finish today's show. I guess one of the things that you're probably a bit young to remember, but back in the early 2000s, I experienced the tech wreck. I was part of it, and Ben Bernanke, who was the Fed Reserve Chair at the time, referred to this irrational exuberance, and we all went over the cliff. And I was one of them because I held stock in a company called Cisco at the time. I was actually an employee, and so we watched the fire wreck, the actual train wreck that occurred as a result of people just blindly following a marketplace. And so I think one of the things, and because I hold a financial service license myself, you've made a good point. Where is the advice industry going to proceed? Because I can tell you now, within my own license, I can't take on crypto because my insurance underwriters have simply said, do that and we won't insure you. And so, do you see the advice industry eventually getting there, or is this something that is still a bridge too far?
It's definitely got a long way to go, Ray. I think that if cryptocurrency continues to stay around, slowly it will become more and more sort of mainstream, and it'll probably go the route of advisors being able to work with the things like Bitcoin ETFs that are in a much more familiar investment vehicle than traditionally holding, say, Bitcoin, which requires quite a bit of extra technical skill and definitely more cybersecurity practices. Yeah.
Cybersecurity there again. Remember, we were chatting about theft within the crypto space. I mean, we could do an entire show on that alone. But I guess one of the things that I always like to do with our listeners and viewers with Dollars and Making Sense is to leave them with a couple of key takeaways. So I guess as we wrap up today's show, Anna, if somebody came along to you and said, look, you've got the benefit of knowledge, you've done your master's and you've written a thesis about this, what are your one or two absolute key takeaways that you'd say to somebody potentially going into this space to say, I want to invest seriously for return, male or female, doesn't matter, no matter age, what would be your one or two key takeaways?
Well, I guess this is something that's sort of very commonly said in the crypto scene, is that you should never invest more than you're willing to lose. And you should also always start slowly. But I think at the end of the day, you just have to really assess your risk profile and see what makes sense for you. And if you
can I just interject very quickly? When you say you should never invest any more than you're willing to lose, sounds like you're walking into a casino, because that's what my wife and I, we used to go to Vegas all the time when we went on holidays, etc., before they were a big thing here. And that's the kind of language that says, hey, you're going to lose anyway. And so I'm not sure if that's necessarily a good strategy.
Mm-hmm. Yeah, at this point, there's no sort of way, like I don't have a crystal ball, so I can't tell you what's going to happen with the future of cryptocurrency.
So are you suggesting then DYOR then? Do your own research?
I would say that I'd say that that's very important. Yeah, you shouldn't really go into it without having an interest in trying to understand what's going on. And it's not for everyone, probably, I'd say.
Well, that's very sage advice. Look, one of the things that I'm certainly going to do, if Coredata are happy for us to do it, we'd like to post a link to your synopsis, the research piece that I actually read and based a lot of the questions, because again, I like, education's all about providing some resource, and one of the things that we're trying to do on the show is really enlighten people. And so right now, certainly the things that really stuck out to me was the gender imbalance, the age imbalance, and again, I think more concerning than anything, I guess the lack of what I would call a stable source of reliable information. Would you agree with that?
Yeah, I would say so. Those two, the first things you mentioned, are definitely interesting points, and the lack of information is a huge part that's relevant to the advice industry. Because there's less ways to sort of understand these investments as you would have with other more traditional asset classes. So you would have the research house ratings and things like that. And crypto is lacking in all of those areas. In terms of performance data, you can see that, like, it exists. You can look at the 10-year chart of Bitcoin, but it's just completely unpredictable, and it doesn't seem to have a sort of logical underpinning for some of this stuff. So, yeah, it's a very difficult space to be in as an advisor to try.
Okay. So, look, we're out of time for today. Anna Vennonen from Coredata, it's been an absolute pleasure having you on Dollars and Making Sense. I'd love to have you back another time to talk a little bit more crypto and blockchain. So, Anna from Coredata, thanks so kindly for being on Dollars and Making Sense.
Thanks, Ray.